Our next guest says the government's numbers are not accurate indicators and you should be looking elsewhere for your inflation gauge. Joining us is Peter Schiff, president of Euro-Pacific Capital. Do you know, Peter, they're calling you Dr. Doom around here, and you don't necessarily mind that, do you?
No, that's okay.
And I'm not going to argue with you at all today. I want to hear what you're saying. There's a lot of the stuff you talked about 3-6 months ago, at least nascently, it's beginning to happen, isn't it?
Well, thanks. Thanks for the recognition. But yes, I do think that the numbers that we're going to get later today, are irrelevant. I think government measures that purport to measure inflation are really present an inaccurate forecast. I think far better measures of inflation are the monetary aggregates themselves and what prices are actually doing, not what the government is trying to tell us prices are doing. Now, I think that said, I think traders are certainly going to pay a lot of attention to today's number, and I think particularly the so-called core number, which I think is even more irrelevant than the headline number. And I think the most irrelevant of all is the year-over-year core, which is absolutely ridiculous because the whole reason, supposedly, for looking at the core is that food and energy are volatile. But when you're looking at inflation numbers on a year-over-year basis, the monthly volatility is already smoothed out. So when you're talking about year-over-year core, you're basically just looking at inflation, but excluding its two most important components.
That's been the way it's been for a long time, Peter. If you go back and were to use the overall number over the past 10 years or so, where should long bonds have been based on your numbers, just going back and looking? Obviously, they were way too low all along, right?
Well, they have been. They're still too low. I don't really know. I mean, I don't do my own studies to try to figure out, what inflation rate really is. I know it's a lot higher than what the government claims. And so I think, the bond market, I think, has also been distorted by the fact that there's a lot of leverage players in there. There's a lot of central banks in there. There's a lot of people buying bonds that are not really buying them for their investment merit. They're buying them for other reasons. And so I don't think you get a real clear picture of inflation from bonds. I think you get a better picture from things like gold and other commodities, which are falling now. But I think gold prices are falling not because of the fundamentals for gold. I think there's a liquidity problem right now. I think all assets are falling, particularly those that are owned by leveraged speculators. And I think the problem there is that, for years during the Greenspan era, there was a widespread, it was acknowledged that there was something called a Greenspan put, where speculators were basically protected from really getting hurt because there was a belief that the Greenspan cavalry would come to the rescue with liquidity, with rate cuts. And I think now speculators, there's 6,000 hedge funds out there, are starting to believe that maybe that put expired with Greenspan and that Bernanke is not going to renew it. So it's like these hedge fund managers are up on these investment high wires and Bernanke is taking away the net. And it's pretty scary up there.
You would expect gold to resume its upward climb then?
Ultimately, yes. I think that you're likely to see the markets, including gold, under pressure until the Fed blinks. I think it's like a giant game of chicken between the Fed and the markets, and I think despite its rhetoric, I think the Fed's going to blink first, and I think ultimately the markets will get a boost.
Hey, Peter, I'm sorry to interrupt you. I just want to get as much as we can out of you. We do got to go in a second, but given what you think about inflation, then financial assets were overvalued for at least 10 years, bonds and stocks. When everything comes home to roost, what are we to expect if everything you're saying actually finally...
Well,
how bad is this going to be for all of us? Will there be a CNBC?
Well, there probably will. It might not be all day like it is today. And you guys might be broadcasting from the COMEX or one of the commodity pits.
Nice.
But basically, the end game of this is going to be a dramatic reduction in the standard of living of Americans. I mean, we've consumed too much. We've saved too little. We've got to go back to production and savings, and we're going to have a much lower dollar, and financial assets are going to lose value. So will real estate. And there's no way around that. We just have to bite the bullet and move forward.
All right, great. Appreciate your time today, Peter.
Yeah,
Thanks for having me.
I know.